Hey, what's going on, guys? It's Standard Stockability. So this is the final video in the video series I was making last week on the Tesla short. I'm just going to walk you through part of the position that I put on at another position as well, but to make it easy for these videos to go through on our YouTube, I'm just going to explain it on a simple directional put trade that I ended up putting on. So that being said, last week I talked about Tesla and this move potentially trading lower on the stock. There's a few videos. If you haven't seen it, if you go back a few videos, there's a series. So this is kind of a little three-part video series on shorting Tesla to talk about these things. So last week, and I'll give you the cliff notes of this, they had the announcement of Bitcoin on the balance sheet. So typically, and I'll say this with all due respect to a lot of Tesla followers, it's kind of what we like to call like a fanboy stock. People follow this, they're in love with it, and rightfully so. The cars are cool, obviously the company's cool. Again, there's always differing opinions on people wanting it to go higher and lower, but again, I look at price action when I'm trading markets and really just nothing more. So that being said, this thing actually it sold off pretty well yesterday, and I'm going to talk about a few market dynamics that went into exiting the position. So a lot of what you see as far as education goes is people talking about like options flow or price charts or technical analysis. You never really see people really discuss exiting positions or risk management or getting optimal fills in markets, right? Because again, it's one thing to understand price charts or to understand basic market concepts. Another thing to exit positions properly and to get out with as most P&Ls you possibly can. So I'm going to talk about it here briefly in this video and kind of go through this. So yesterday, again, really on no news, and I was leading it in we call our guided traded sessions in the mornings. This thing pre-market was already gapping down. So we had price levels in place in this thing yesterday's morning move. It moved a lot lower than I thought it was going to, but again, I had targets at 775 and kind of around this area. So as price opened yesterday, okay, and this is important to understand for those of you who've never traded options or you're new to options, what you can't do in markets is sit there and wait for a price to an exact level in options trading and expect that you're going to get the most P&L out of it. Number two is if you just put a limit order and expect that you're going to get filled, the market doesn't have to fill you in anything, right? Most of the order book these days is automated based trading, right? There's a lot of firms that run a lot of the market making on the exchanges now. So you've got to be really dynamic when you're getting in and out of positions. So yesterday morning pre-market, when this move was setting up, and we were in, again, we call it our GTS, I was telling students, I go, you've got to be real careful here pre-market to make sure you get an exit on this, right? So, this is the opening, and these are the options, or one of the positions that I had was the 770 puts on Tesla. So pre-market, or not pre-market, but as soon as the market opened, rather, these things were trading about 14.50, and they were opening here, and they spiked about $24 a contract, okay? So on this move here at 762, these options spiked to $2,400 a contract, okay? They closed at 800 and spiked. It's very unlikely you're going to top tick these type of moves. However, a lot of that action really took place if we take a look and see where these kind of candles are around the 18 to like 16 level on the right. Kind of 18 to 15 is really where a lot of the P&L or the exits happen, right? If we look at a 1 minute chart on this and see where these options traded to, you can see it a little bit better, right? And this is how fast, again, options pricing can change when you use shorter duration options. And again, I'll talk about that in a second. But basically, here's the open at 6:30. You have open at 12. They rallied to about 18 to 24, pull back to about 16, hit 18, and then literally at 10 minutes later, so from 6:30 to 6:40, right? These things basically move from $20 a contract back to 12. Okay, so again, as we got to this level here and bounce, you had this P&L shift in the market. Okay, so part of this and part of what I was trying to discuss in our guided trade session yesterday was, regardless of whether you're trading Forex, options, Bitcoin, futures, whatever it is, whenever you put a position on, you have to have a plan for an exit. Most people have a plan, like a trade plan, like risk, like I only do this, I only look for 2-to-1 trades. Most people don't have a plan that gets them out of the trade, okay? And this is real important because if you don't have a plan pre-market, and I opened up, I'm like, well, what am I going to do? I'm going to wait on this. Imagine I had a 10 lot position on this, and I only had a small position in this book, and I'm going to show you in a second. But imagine if I had a 10 contract position, and I let this pull all the way back to 10. It didn't have exits at 18 or 17, right? On a 10 lot times $7 difference, it's $7,000 difference in P&L, okay? It makes a very big difference and how you execute in your trading year and your performance as a retail trader. So that's something we discussed. So I'll show you the position here briefly and talk about it just in passing. So I had another position as well. Let me see if I can't blow this up to go through this. 1 second, cancel that. Come here. There we go. So this position was bought on this the day before for $600 and $500 a contract, respectively. So one of the positions I put in, you can see, literally was filled right at the open. Okay, so there's no hesitation. So before the market opened, I put a limit order out saying, look, I want to be filled at $15 or better. Okay, then I put a second limit order in. Right, I was trying to cancel it. I didn't get it canceled in time. Right, I was trying to put it at 17. It filled it at 17.19. Okay, so again, I'm not showing you this to brag on P&L. That's not the point. It's the point of me discussing that is pre-market when we were looking at this, right? I was already assessing what those options could open up at, give or take, and so I wanted to put orders in the order book so that as the market opened, I could get filled. Okay, it's the same thing right now. As I create this video, pre-market, I don't have a position on this right now. I have some calls that I sold in this, but pre-market, if I was long directional puts and I see this gapping down from yesterday and I have targets, I want to put orders in the book, right, to ensure I get a fill. Okay, and again, I get filled to 15 to 17 on this. So if we look at my fill area, it was around here. Now, obviously these traded to about 20, 21. And, there's maybe a few contracts traded here at 24, but that's kind of one-offs. But the majority was kind of traded at that range. I'm not going to be mad about missing out an additional $200-300. It's unlikely you're going to get there. So again, options trading on short-term trading, there's a lot of other dynamics that go into. Don't let it scare you for those of you that are getting into options. The longer duration options, you don't have to be as aggressive on exits. But again, when I was stocking this move, I was expecting really, and if you look at the past videos, this 795, 800 area to break with conviction. And that's what we got. In fact, as we sit here now pre-market, I do think this is probably trading a little bit lower. I have a target about 700, 720 on this stock. But again, I want to make the final video in this series. So if you guys have more questions on this, head over to our website, stockability.com. We have webinars you can attend for free, learn more about this as well. So whether you're going to trade options, stocks, or other assets, we have them there for you. I pretty much specialize in options trading. So again, make sure to like and subscribe to the channel. Thanks for watching. And go back and watch those other YouTube videos as well on Tesla. It'll give you more context to this video.